Progress.
Hi friends, very good afternoon all of you. Welcome back to Cap Classes. So, if you are a student who is into finance stream or accounting stream or studying business, okay. So, after completing your course, what will you do? You go for a job, obviously. So, what are the jobs available for those who are into this particular accounting stream? You could be, you are doing bachelor's, or you are doing master's, or you are doing ACCA, or you are doing AAT, or you are doing any chartered accountancy kind of professional course. So, eventually, after completing the course, what will you become? An accountant, financial accounting, financial accountant, or bookkeeper, okay, or accounting clerk, or auditor, audit assistant, or management accountant, okay, or financial analyst, or credit controller. And you write a list of professions or list of jobs that are available for a student who is studying accounting. Okay, you can make another 100. I have just for the namesake, I have written some 7 or 8 here. Write another 100. Do you know what is common for all these people? And you can do taxation, okay, tax planning, tax manager. One thing that is common to all these people is their understanding and knowledge in financial statements. One may use financial statements for financial analysis. One may prepare financial statements. One may conduct audit of financial statements, or one may calculate tax based on financial statements. But basically, what is common to all these professions or all these jobs, all these employees, all these roles, is that you deal with financial statements. So, whatever you are going to be, or whatever you are grooming yourself to be, whatever the department you choose, it could be tax department, it could be risk, it could be assurance, it could be investment banking, it could be banking, it could be financial accounting, it could be management accounting, it could be cost accounting. Whatever you choose, one thing that is common is financial statements. So you should have a very strong understanding of financial statements. What is meaning of financial statements? See, there are three financial statements, three items in financial statements, or three statements that come under the umbrella. One is called balance sheet, one is called income statement, one is called cash flow statement. I am intentionally excluding two more elements. They are notes to accounts, statement of changes in equity. So if you start reading at a higher level, there are 5 statements: balance sheet, P&L, cash flow statement, notes to accounts, then statement of changes in equity. But for the sake of simplicity, let us speak only about these 3. And I'm not going to speak anything about these 3 also. Just I want to give you a very brief introduction of what these 3 things are today. So close your eyes. Financial statements means 3 things. Remember, a balance sheet, which is properly known as statement of financial position. A P&L, which is properly known as, either you can call it income statement or you can call it statement of profit and loss, SOPL. Then cash flow statement, CFS. Normally, cash flow statement, we do not use CFS because you'll be confused. If I use CFS, you'll be confused. Is it cash flow statement or is it consolidated financial statements chapter? So normally CFS we use for consolidation. That is the reason I did not put short form for cash flow statement here. Okay. So look here, the first bullet point I said, financial statements are written records that convey the business activities, financial position, financial performance of a company. So what is financial statements? These are the written records. So I'm doing a business. At the end of the month or at the end of the year, I want to know how much of sale revenue I achieved during the period. I want to know what are my expenses. I want to know what is my profit. I want to know how many assets I have. I want to know how many liabilities I have. Without these basic details, how can I run my business? Even if I'm running one small bakery roadside, still I need all this information. Even if I'm running a corporation like Google or Apple, still I need all this information. So basically, as a business owner, I want to know my financial position, that is assets and assets and liabilities, balance sheet, and financial performance, that is income, expenses, profit. So underline this financial position. There you can write down balance sheet, assets and liabilities, financial performance. Underline. You can write down there income, expenses, profit. These are the things you want. These are the basics. One step above this is cash flow statement. So basically receipts and payments. How much of cash I am collecting, how much of cash I am paying, how much of cash I have in my hand. So these are the three different types of financial statements we deal with. Now, who uses financial statements? Look here, financial statements are used by various stakeholders. Various stakeholders. Stakeholder. Who's a stakeholder? Stakeholder basically is a person or an organization that deals with you, and his welfare depends on your business, or your business affects him. For example, you are a student studying in a college. Okay. Who are all the stakeholders of that particular college? Shareholder means a person who invested money. Stakeholder includes owners, those who invested money, managers, employees, students of that particular college, parents who pay fee, that particular locality, government, then, higher education board. All these people are known as stakeholders. Similarly, look at a bank. Look at a bank. Who are the stakeholders? Those who deposit money in bank, they are stakeholders, depositors. Those who borrow money, borrowers, they are stakeholders. Those who invest money in that particular bank's equity shares, investors, government, tax authorities. Okay, and then regulatory authorities, like banks are controlled by central bank, right? In India, you call it Reserve Bank of India, and every country has their own central bank. Stock exchanges, all these are known as stakeholders. Now look here. There are two different types of stakeholders. Internal stakeholders are employees, managers, owners, who are insiders, inside the family. External stakeholders are those who are dealing with the company but are not the insiders. They're outsiders. Like it could be society, suppliers, government, creditors, shareholders, customers. Okay. So why all these people are using financial statements? Now, why suppliers need your financial statements? Why society need your financial statements? Why government need your financial statements? Why creditors, shareholders, customers, owners, managers, employees, why do they need your financial statements? Simply, blanket answer, wholesale answer. They need your financial statements for decision making, for making certain decisions. For making certain decisions. There will be different types of decisions. But see, for example, if I tell you, hey, why don't you invest money in Reliance Industries? It is a good company. I told you to invest in Reliance Industries, for example. Then you'll be interested to know how much of sales Reliance Industries have booked in the previous year. What is their profit margin? How many assets they have? How many liabilities they have? So these are the basics you should understand before investing. Now, otherwise it becomes gambling. So whoever you are, you use financial statements for a particular purpose. Okay. Some people will ask, Pawan sir, I can understand all these things, but society, why do they need my financial statements? Something like corporate social responsibility, how much you are investing, how much you are plowing back, how much you are, reinvesting your profits into the society. They want to know. Okay. Now, I will show you the pro forma. So, Lakshman, can you read this pro forma for me? This income statement on the right hand side, you can see one image. Can you read that?
Net sales $3,980. Investment income 14. Revenues and gains 3,994. Cost of sales 3,100. Selling, general and admin 640. Interest expense 20. Loss on sale of equipment 4. The total expenses and losses 3,764. So net income $230.
So, when you read this, you need not be an expert in accounting and finance. On the face of it, there are three things: A, B, A minus B. Let us say C is equal to A minus B. So what is A? Revenue. What is B? Expenses. What is C? Profit. Simple. So this is called income statement. So income statement consists of revenues, expenses, net income. Net income is nothing but revenue minus expense. Okay, I have booked a sale of $100. I have spent $80 to sell that particular product. Then what is my profit? 20. You understand? Now, what comes under the umbrella of revenue? What comes under the umbrella of, these expenses? That is again little complicated thing. There are so many expenses. Sometimes, a layman might not be able to see some expenses like depreciation. They do not even know what is, many people do not even know what is depreciation, but you are an accounting student. So, depreciation. Now, when you go and speak about the concept of depreciation with a layman, he might say, no, 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 no. That is just a notional figure you are putting. How can you put that? But the accountant understands what is the importance of depreciation. What is the importance of provisions? All these things will include. Okay. So again, refresh. What income statement shows? It shows three things: revenue, expenses, and net income. Net income is nothing but net profit. Is this clear? Now we have one more thing. So Lakshman, can you read this?
Balance sheet. Assets comes current assets, checking account and 5,000, savings account 1,000, petty cash 500, accounts receivable 22,000, inventory 15,000, prepaid insurance 6,000. Total current assets 49,500. Non-current assets, accumulated depreciation minus 4,500, computer 7,000, building 65,000, land 60,000. Total non-current assets 1,77,000. Total assets 1,77,000. Liabilities and equity. Liabilities. Current liabilities, accounts payable 12,000, line of credit 20,000, payroll liabilities 7,000. Total current liabilities 39,000. Non-current liabilities, long-term debt loan 48,000. Total liabilities 87,000. Equity. Owner's capital 35,000. Retained earnings 55,000. Total equity 90,000. Total liabilities and equity 1,77,000.
Simple. So on a macro level, not going into the minute details of line items, what balance sheet contains, what balance sheet consists of? Can you give me a bird's eye view answer, like, a snap? Assets and liabilities, that's all. So now, if someone asks you, what are the elements of income statement? Can you say revenue, expenses, net profit? If someone asks you, what are various items in balance sheet? What balance sheet consists of? Can you say assets and liabilities? And again, when you go and dig deeper into the assets, there are two different types of assets: current assets, non-current assets. You go and dig deeper into liabilities, there are two different types of liabilities: non-current liabilities, current liabilities. And then there is something called equity, which is nothing but the capital you invest plus the profits you accumulated. So this is a balance sheet. Now, today's homework is every line item. Say, for example, petty cash. If you know it, very good. If you do not know, just open Google and type what is petty cash. Enter. Accounts receivable. If you understand, fine. If you do not understand, type accounts receivable. What is accounts receivable? Enter. Then read what all these things are. There are beautiful portals like Investopedia, Okay, these are the websites which contains a lot of information about all these things. There are so many websites. I'm giving you one example. That's it. So what is prepaid insurance? All these things you can dig deeper. But for now, do you understand that balance sheet has two sides? On the left hand side, we write assets. On the right hand side, we write liabilities and equity. That's it. Is this clear? Now, why do we need this financial statements? What is the purpose? What is the purpose? If you know financial accounting module, if you're doing ACCA, I told you this, you have in F1, F2, F3 level, that is, which is foundation, you have F3, that is connected to F7, that is connected to SBR, strategic business reporting. Okay, so first level financial accounting, next level financial reporting, next level strategic business reporting. These are the three levels: foundation, inter, and higher level, advanced, final level. Okay, so when you go back to basics of your financial accounting, what is the necessity of this system? Simple. There is a businessman. In business, there are so many transactions and events. Examples of transactions and events could be purchase of raw materials. When you are manufacturing finished good, you incur a lot of wages, other overheads, expenses. Then there is some cost of production. Then you'll incur so many other administrative costs and all. Then you try to sell the goods by incurring some marketing expenses, selling expenses, distribution expenses, warehousing, digital marketing and all. Then you earn revenue. All these are transactions and events, right? They are to be recorded. They are to be recorded. Where to write? Where to write? This is what we call books of account. That could be manual, or that could be in the system. That could be based on one accounting package. Okay, today for recording these transactions, you use Xero, Sage, KPM, Tally kind of accounting package. But previously, 20 years back, 25 years back, when computers were not there, people used to buy physical ledgers. You go to a stationery shop and ask for, when I want ledger, they'll give you a ledger book. In that, they used to write sales, purchases, everything will be recorded in this book. That is what we call books of account. This is the process of recording is called bookkeeping. That is the reason junior accountants, entry level accountants are known as bookkeepers, accounts assistants. Okay, now this bookkeeping will give you transactions, a record of transactions and events which is used as input for financial statements. How do you prepare balance sheet? How do you prepare P&L? How do you prepare cash flow statement? To prepare all these things, you should record transactions first, right? Then these financial statements will be reported to stakeholders. Quarterly financial statements, annual financial statements. Why do companies publish their financial statements? You open any website, any website of any business, there will be a column called investors. Go to investor column. Financial statements, annual accounts, monthly, not monthly, quarterly accounts. All these things will be given for the benefit of investors. Any stakeholder can see them. Even they need to submit that to stock market also. For what? Decision making. Decision making. I will make a decision based on your financial statements. I'll make a decision whether to invest money in you or no. That is what we call decision making. So this is the purpose of financial statements. That's it. So I have given you income statement and balance sheet. That's all. Okay. So today I'll give you one small assignment. Any company you like, download that particular company's financial statements, go to balance sheet page, read, go to income statement page, read, go to cash flow statement page, read. That's it. Just look at it. Maybe it will take just hardly 5 minutes, 10 minutes of time. But trust me, my dear friends, this is of very high use. You understand the ultimate, the last step of accounting. Preparing financial statements is last step of accounting. When you understand what is the goal, what is the objective, why am I studying financial accounting? Why am I having financial accounting department in a company? To prepare financial statement. What are financial statements and what is the need? Already I told you. So today assignment is download financial statements, read them, etc. Okay.